Let's get the event started.
All right, I'm gonna move to theater.
Yeah. Yep.
Hello, hello.
Hello. I should figure out a way to automate all this stuff, but it's and I have so many different platforms.
Hello, hello.
Yep, you're sounding good. All right, we're looking pretty saucy. I'm playing a Halloween mix. Connection's good. We got good bit rate. All right. Hello, everybody. It is November the 1st, the day after Halloween. I hope you guys had a good Halloween. We got 4 days till the election. It's going to happen next Tuesday, so I recommend you vote in the best interest of crypto.
Hello.
I'm joined today by Astronaut Toad. Can you hear me, Astronaut? I don't think you can hear me. All right. Yeah, it's there we go. All right. Can you hear me now?
Hello, hello.
Yo, can you hear me? All right. Just give me a moment.
Hello, hello.
Hey, can you hear me? Check, mic, check.
Close your eyes.
Hello, hello.
Yo, mic, check.
But could you love a haunted house? Or could you love me now? A haunted I'm a haunted house. A haunted house. If you're too scared, get out. A haunted Shadow Blade.
All right, everybody. Sorry for that little technical difficulties. I am joined here today by Astronaut Toad. He's going to be showing us a little bit under the hood, exclusive of one of indicators that he's been developing. And we're going to be checking out some back testing. Astronaut Toad, do you want to say hey?
Good evening, everybody. Am I sharing my screen yet? Let's go.
Yeah, let's share some of the screen. Got a little bit.
So, I've been working on a market squeeze type indicator for, well, I've been working on it for 2 years plus now. But it's a basic concept, the Bollinger Band Keltner channel squeeze, very famous strategy technique of detecting periods of low volatility when the market is constricting, but it's a very honestly terrible predictor of directionality. In other words, a squeeze is a very strong indicator that the market is about to move in a very big way, but it's kind of terrible at predicting the direction of the move. So what we have done over the last few months here, with the help of Mickey and Kermit, is I've developed a bunch of different ways to perceive the traditional squeeze in a very new and unique way. And so what I've done here, as you can see on this chart, the actual chart itself, I created a visual representation of a squeeze. So you can see this orange is when the Bollinger Band goes inside the Keltner channel. That's when it's not inside, the lines aren't that relevant, so I made them really faint, but you can see this orange line here, and then the purple lines there. You can see those lines, and then when the Bollinger Band goes inside the Keltner channel, that means that, to get really nerdy, standard deviation is smaller than average true range, because a Bollinger Band is calculated using standard deviation and the Keltner channel is calculated using average true range. Both of them are indicators of volatility, and when they are very low numbers, that means there is low volatility. But as you can see with this chart, there are times when you get squeeze conditions, like right here, you can see there's some orange, but it doesn't really mean much. It just means that price action is dead or indecisive. It's not really going to move in a direction, although it did, but it would be impossible to predict the direction of this move. So that's what we're going to get into tonight. So first and foremost, I recently, over the past week, actually in the last few days, I threw together another indicator. I souped up an indicator that I've been working on for a year, actually, and added a filter. And this was what Mickey made a comment about the squeeze looking like it's a tightening squeeze, where you can see here, the squeeze starts and it is, let's measure it. I'm going to turn my magnet off here. This squeeze, when it starts, it is 1.37% tall, or $914 in Bitcoin. But then by the time it ends, this squeeze is just $550, or 0.83%. And at some point, it gets even smaller. It gets down to 503.75%. Anyways, what we realized is that that's the golden goose, or the goose that lays the golden egg, is when you get a squeeze like that and it gets tighter and tighter. That's when you get a much more reliable indication that a huge move is going to happen. And in this case, you can see here my moving averages that I have in the market squisher, or I'm calling it market smasher, just out of habit. But this, you can see that all the moving averages indicate beautifully that this move is going to the upside. My EMAs, which is this cloud here, are bullish. And then my other special moving averages, which I really just use for a trailing stop loss, are all bullish. So this squeeze, when it pops, you've got an amazing long. Even if you just FOMO in at the close of this squeeze and you put your stop loss below the low that happened during the squeeze. Oh, I need my magnet back on. Call that the low. Even if you just go in willy-nilly, you're looking at a what move? Now this is a indicator that is not going to be very frequently used, because big giant moves like this, we're on the 1 hour chart, they don't happen every day, they don't even happen every week sometimes. But when they do happen, this is the moment when you're either going to make a lot of money or you're going to get wrecked by feeling like you're missing out. You're going to try and short it when it gets to a certain level, or you're going to jump on at the top. There's just so many ways that this can wreck you. So if possible, you want to be riding the ride and just taking it. So that's what we got here. You've got this long that turned out to be a 4.5 risk reward ratio. And even that, like right after it pops, you can move it to this low here and give you an 8 risk reward ratio. That's incredible. And then also you've got this trailing stop loss here. This blue line, what average is this? This is a modified adaptive moving average. I believe it's called the Kaufman adaptive moving average. It's just an algorithm between two EMAs, and one slow EMA, one fast EMA, but it trails price, kind of like super trend, but in my opinion, even better. But if you just use this in an automated way, you would have gotten out there, and that would have been amazing. So this is what we're looking for, a squeeze that constricts. And if it looks like that, you've got a really good chance at a move. For example, this moves quite well. You would have, this is not a filtered move, as you can see, we'll get to that, but it still gives you a shot up. But anyways, what we wanted to develop was a way to filter all of these squeezes, these little bits and pieces here. I don't want to trade every single bits and pieces squeeze. I want to know only when the excellent A+ setup squeezes are happening. So what I did was I modified the regular Squeeze Pro indicator. It's a momentum oscillator, and these orange dots are the squeeze. As you can see, it kind of lines up. The settings on these two are a little bit different. I have modified it's not a standard Bollinger Band and a standard Keltner channel. I've modified the deviations and ranges a little tiny bit. And same thing with this. It's not a standard Bollinger Band Keltner channel setting, but you can see it comes together pretty nicely. And what I did was I added a filter and an alert to alert you if a squeeze not only starts, but if it gets to a certain percentage of further constriction. So what this fires off is, let's see, what is it set to right now? It's set to 0.6, which means 0.6, that's a decimal, so that's 40%. So by the time it gets from here to here, it is constricted 40%, and it goes even further. So by the time it gets here, you should be putting like at least one, maybe even 2 risk factors on this trade, because it's going to make a monster move. And there we go. So this is the new addition. We're going to release this indicator inside the Cartoon Money Printers Discord. sometime this next week, and we'll have it available by next live stream next Friday.
Dude,
And I'm really excited about that.
I'm excited for it too. I can't wait. I'm gonna do some back testing on my own.
Yeah.
Everybody, if you want to try this indicator, you can have 90 days free access if you go to www.cartoonmoneyprinters.com. Click the Start Now button. Sign up through Whoop.com, the portal that we have there. That they process our portal. We accept crypto. We accept card. The 90-day free trial is applied to the subscription of $25 a month. I'm able to add 90 days to anybody who pays crypto. Unfortunately, you have to pay first with that. But once you pay and you get in, then I can give you the 90 days on top. And yeah, I really want to work with people to get in here and try it out. So let me know if you have any issues or anything. Like I said, free access. See if you like what we have to offer. We're going to keep rolling out these new products as much as we can. Anybody who's interested in becoming a technical analyst or is a technical analyst and wants to be part of the team, please reach out to me. There's always room for us to expand. But yeah, go to www.cartoonmoneyprinters.com if you want to try Astronaut Toad's sweet hot sauce that's coming out next week.
Yeah, so the Market Smasher or Market Squisher is already in the Cartoon Money Printers Discord. This one up here, this overlay. So if you see this setup right here, like I said, it doesn't happen often. This is not a trade that you get to take every single day, but it's a massive move. And if you had to wait around a week or a month to get a trade like this, you would still want to know and be ready to take it. Because this thing that's an 8% move in Bitcoin. Imagine if you could catch most of the 5 to 10% moves that Bitcoin makes. That's what I want to glance at tonight and see how many times this thing catches a big move. And so what I'm going to do is, I also wanted to note that, let me switch over here to the NASDAQ. I also wanted to note that literally right after I finished developing this indicator and put it on my chart, it gave me this signal here. And, I was using the Heikin-Ashi candles. Yeah, there it was. Sometimes you get a smoother idea of the squeeze. This is one of my secret sauces. And I usually keep this private in the Discord, but if you're watching the stream live right now, here's your secret. The Heikin-Ashi candles help give you a more smooth look at the squeeze. That's a trick that I've been using for a few months now, and I really love it. But you can see this squeeze constricts, it gets tighter and tighter, and then this is a mean reversion squeeze where you can see this first moving average reaches down and grabs price, and it gets a little blip here, but it doesn't break below this low. But this is a move on the NASDAQ of, let's say you got in here, you just totally FOMO'd at the break of this and rode it through the retrace like I did. You're still getting an almost 1% move on the NASDAQ. I don't know if anybody knows what trading the NASDAQ is like, but imagine trading one Bitcoin if Bitcoin was $300,000. That's what trading a NASDAQ mini is actually like. So that is some real firepower right there. Let's pull up the NQ, see what that move would be. How many dollars is that move? $168 times 20 contracts per mini. Good Lord, that's a big payday.
Mm-hmm.
So I like NAS because it gives you live data without paying CME. But yeah, that was my really good news. I was really thrilled. I was not expecting it to work on the NASDAQ. I only developed this for Bitcoin. or crypto trading. And then I was like, hey, I wonder what the NASDAQ is doing. Took this trade. I think I got in somewhere around here as the squeeze was releasing, and then I rode it through these lows. Thank God I didn't move my stop loss because it wicked down here and it just blasted off. And my take profit was somewhere right around there because of this previous low, and it just went right to my take profit. And that was a real wonderful trade there. So I want to check a few other things. Let's go back to BTC USD. I want to glance through the chart. Oh yeah, here's another one. So this is where I want to pull up the par. So I noticed this the other day. Bitcoin squeezed, but if you just look at the moving averages, let's pull this up to the, I'm going to put this at the edge of the chart, and you tell me, you see this squeeze start, then down here, this flags, the gray box starts telling you, hey, you've got a A++ setup squeeze here. And then you see it fire like that, and it just barely curves. What direction do you think this is going to move? The EMAs are stacked. This moving average in the middle, my favorite moving average, is doing nothing. It's just chopping back and forth.
I'd say
I honestly probably would have longed right here.
Well, I mean,
would have longed the top like an idiot.
Based on the candlesticks and liquidity, I don't know. A short could have been a possibility.
Yeah, so that's what I want to look at, is when you see it pop like this, this is a classic issue with most squeezes, is you see it breaking through and you're like, oh man, it closed outside of the squeeze. I should long here. Well, number one, the squeeze ain't done yet, and you can see these tiny little fingernail clippings curve down at the end, and that's your doomsday signal. So if you got in here, rest in peace, you got wrecked. But what I want to do is I want to say, let's look at just this underlay indicator here, because it says squeeze, 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 and then it fires kind of at the same time. So let's dump this and let's pull up our very own price action reader. Thank you, Kermit. I don't know if he's in the audience tonight, but this price action reader is the divergence master of strength, the RSI strength divergence master plan. Let's see here. I've got everything pulled up right now. I'm gonna squish down the, let's put the volume down here. I'm gonna bring this up, and then I'm gonna maximize the par. Actually, let's bump it up. And what I've got here is a whole bunch of par settings. But so I've got the 3-minute, the 6-minute, the 15-minute. Don't want those I'm trading the 15-minute chart. And then I've got some others, big time frames. These are all in minutes. So like this is a daily.
Yep.
I'm not going to look at that right now. But I am going to look at these two gigantic time frames, 600, 720, that's a ribbon. And then 240, that's 4 hour, and 300, that's another ribbon. So right away, looking at this, I'm going to go back to the regular and see, oh no, see, this is where the Heikin-Ashi candles come into play. You need the Heikin-Ashi candles to see the squeeze sometimes and get the gray box to alert you that the squeeze is prime. So right away, everybody in our Discord should know this thing is maxed out, and the slightly lower time frame just curled under the higher time frame. So there ain't no way you're longing this squeeze firing. So number one, it saved you from that bad idea of a long trade by pulling up the par and just glancing at it. Number two, can we find ourselves a short signal? I'm not sure, because what it looks like is we've got this high here, and this is equal high, and that's higher high. So based on the par, you might have tried to short somewhere around here, because you've got a I'm gonna bring the green up a little bit. This is the 15-minute par, and you've got a nice divergence right there. So you might have tried taking a stab at a short somewhere around this level. Could have gotten in short there. Then when the squeeze gets really good right around here, and you say, okay, this, I'm going to put on some size. I'm looking at the par, and I don't really see a good divergence going on here. It's really behaving quite normally. Like these highs are respecting, these highs are sort of respecting. This right here is sort of giving you the tiniest bit of a bear div.
Do you have a 4
But you have to remember
on the par?
Yeah, that's the blue ribbon.
Okay.
So this is giving me a faint bit of a bear div. What I should be doing is not looking at the Heikin-Ashi candles when I am looking at the par, right? So that's a bearish div right there on the 15-minute, because that's that, and then it's down here like this.
Bear div on the greens. Yep.
And then it's not really giving me a bear div on the 3060, which is this white and yellow. But I'm really liking that right about here, the faster of the blue ribbon curls under. So you can see that right there. Let's maximize this. See how that's going under right there? This line, how this drops right there. And the other one has also rolled over. This is the faster of the bigger time frames. So you've got two rollovers on the higher time frames. And then you've got the faintest of divergences on the 15-minute. That alone is going to tell me, hey, you know what? When this squeeze goes, and you can see it pops right there on the standard candles. See how this goes right there? I'm going to make these orange dots a little bit bigger here. I'm going to make the reds tiny, a little bit less noticeable. See how that squeeze fires in the up direction? That, honestly, this is where you just have faith and you short the pump. You imagine the people going, oh, hey, it's going, and they're longing right here. They are buying from you as you are selling to open your short. And man, that thing just gets slapped hard. And everybody right there is super bullish because Bitcoin just cracked above 70K. And everybody's like, oh, it's going to 80K, 100K next. Well, if you got in right there, you're writing it down 4%, $3,000 before you get a bit of a divergence there, right there. So there's your exit signal on the par.
I want to point
on the
out too, that
3060.
I made the call of a possible bearish divergence on the daily par. So if you bring up the 1440, and then
Oh yeah, let's look at that.
yeah, and then if you look at the daily, it might the signs were there. The signs were there that this wasn't gonna keep going.
Yeah, but look at that. Even putting your stop loss at this recent little high here, you scored yourself a 5 or 6 risk reward ratio, and that's a real amazing combination. Let's go back to inputs, 1440, and then I'm just going to hide these others except the 4 hour. Oh, I want to check out Kermit's 15240 combo actually for this.
That's a good call.
Yeah, so this is rolling over right here like this, right?
The daily is where I was at. See,
Now let's pull
you'd
this
have to
up.
zoom out a lot more.
Oh yeah, I see what you mean. Yeah, let me brighten this up.
That's where I saw the div was on the daily. I was like, I even drew it out on my chart.
All right, so here's the 4 hour. Oh yeah, look at that. That is clear as day. And
Do you want to draw it out for the viewers? what we're seeing?
Yeah. I'm gonna shrink down my. Well, let's check this out. So first of all, this is the squeeze is giving a momentum oscillator, and it's kind of behaving normally. It gave you a bear div right here, which wasn't good for much, and then this is a higher high, so it didn't really give you that much. So I like. I've used this momentum oscillator successfully in the past, but nothing beats the par, man. This thing is just a money printer.
It's versatile. It's versatile. It's a Swiss Army tool for looking at what time frame you're trying to rock.
Yeah, well, that's why I have all the time frames pulled up or locked in, and all I do is, if I'm scalping the 5 or 15 minute, I've got time frames for that built in. That's the beauty of it. That's why I love the.
And the divergence even goes back even further. As price keeps pumping and getting
Lord.
higher.
Look at that. Yeah. So that's a bear div.
And then draw
higher high in price, lower high in the oscillator.
Could you
then
you draw it on the price so they could get a visual?
Yeah.
Thank you.
You got that. Well, when you're looking at the different things, you want to look at the close of the candles. So to really make sure, you always want to double check, because strength, RSI, is usually measured off the candle close. And sometimes a crazy wick might fake you out a little bit. But there it is, close to close, high to high. That just gets even more bonkers from there to there. And then this thing going steeper on price, and then the bear div getting lower than this. Like it didn't even tap that line there. That's a game over. Like,
yeah.
If you're bullish, right? If you're bullish after this, Lord have mercy.
Yeah. So what that is showing to us, and what we're looking for, is as price is going up, it's essentially inducement of volume that isn't there. Like the momentum isn't there to punch through, and so that's why we're.
And you're right. Momentum did give it as well here.
Yeah.
We're looking at this to give us an overall bias. This purple line is the daily RSI, but it's sped up. I think we're at we got some faster settings than 14 regular RSI. But anyways, this is giving you a bias to say, hey, don't long this level. So number one, you are automatically not taking a terrible losing trade. That's always good. And then number two, what you do is from there, you say, okay, with that knowledge, what do I do? I'm going to go down to the 1 hour, and then I'm going to delete these big, gigantic divergences. Whoa.
Yeah.
Don't delete the whole indicator.
Undo.
Oh, I love undo on TradingView. It just goes and goes back in time.
No, you don't get that with a lot of products.
So you pull up the 3060, and like we were looking at earlier, you've got a double top here, but it's been double topping this level since all the way down here. So imagine this. This is how I like to think of it in terms of strength or momentum. And people often don't understand divergences, but here's how I explain it that seems to make the most sense to me. What strength is indicating is the rocket is launching to the moon, okay, and it is going, and it's got this much strength or power, and it's giving 100% of its power, and it got this high, and then it got even higher, but it only took this smaller percent of power to get there. So what that feels like is, just imagine you're on a trampoline or you're going up into space on a rocket, and your gravity is, the floor is falling out from underneath you. Gravity is dragging you back down. because you're way up there, but the strength, the same amount of strength, the strength is fading basically. And so by the time you get here, you've gotten all the way up here, but you're not showing an increase, a respective increase in strength. If price is going up like this, then RSI should be going up like this blue line here on the 4 hour. That's what your strength should look like. But it's smashing against this top here on the 3060. And so by the time it gets here, it just says, okay, well, what do we got to do? We need to reload. So it could go higher. By the time it gets here, it could go higher. Just looking at the 3060. What did it need to do? It needed to drop back down to this low here to reload on 3060 strength. So it got back down here. Then it tried again to get back up to these levels, and it got pretty close, but the actual strength shown was terrible in comparison. And that's your red flag number 2 of just, okay, this thing it's trying, but the strength just isn't showing. So by the time this rolls over, you should be in a short, and the icing on the cake is just that I think it showed up on the 30-minute as well. Yeah, it showed up right here on the 30-minute. It said, hey, you've got a really good squeeze. You might want to do something about this. And just looking at the par, you've got these higher time frames rolling over, and you've got that gigantic 1-day bear divergence. So, yeah.
And I just want to say that Alex Sparks got a wonderful entry at like 72 for a short. He mentioned,
nice.
He mentioned that in the Discord. That's another thing you get when you join.
One of these last pumps here.
Yeah, and Alex does really good on the macro calls. Him and I have a lot of I think confluence.
Yeah, that's what I'm all about, and that's why I like showing people this style of trading. Because as you've heard me say all throughout the evening, first, number one is I want to know when I should not take a trade. We've got all this powerful data. We've got all these powerful indicators. Surely you're not just looking for a setup to say, hey, it looks good, I'm going long. You need to start by saying, okay, what are the market conditions filtering out bad ideas? That's your foundation, is saying everybody's bullish right now and saying we're going to the moon. How do I filter this data and say, okay, no, it's maxed out, and the indicators are saying it's constricting and tightening and getting ready for a move, but what I was trying to say was, even if it didn't give me a perfect short signal, at the very least, I didn't waste my money on a long right here, you know?
Mm-hmm.
That's my rule number one, is if you're just starting out, that's what you need right off the bat, is you need a way to stop losing money.
Yeah.
You need a way to survive until tomorrow. But when you have the skill to look at this chart, this is a great example of I don't know, what is it doing? Should I do,
And
this is a great example
real.
of real FOMO. Everybody is saying, like, I got that. This is a classic sign of time to sell. I got the call from the friend who's not into crypto, and he was like, hey, I checked my Binance wallet, and I was like, pardon, please hold, sell. Okay, what was that, my friend? What were you saying?
That is legendary.
And that's the classic we're about to see a top, or at least for a while. It might go to 80K tomorrow. I don't know. The divergences are only really good for, say we got a divergence on the daily candle. I'm only going to trust that divergence for 8 to 10 to 15 candles. So you got about 2 weeks, and then it's game on again.
Yeah, exactly.
So that's that. If it goes to 100K after election day, you know, you don't get to be like, oh, you were so bearish, so bearish. Well, I took my trade, I got my short, I made my money,
Yeah,
and now
I'm on to the next trade.
now I'm ready for what happens next. And
Absolutely.
this, I gotta say, the 4-hour dropped really, like, it went, the 4-hour went from maxed out. I'm gonna measure from when it dropped under the line to when it hit this line. One day, 15 hours. The 4-hour went from top to bottom.
It's a
That is impressive.
Yeah.
So here we go, ladies and gentlemen. Ladies and gentlemen, we have got Gigantor Bull Div right there, this low. So, you know, start your engines, pack the rocket fuel, pack the bags for the rocket. Maybe. But we got to wait for the other time frames to align.
I trust the
And
daily.
what are we looking at right
I
here?
trust the daily div stronger than the 4-hour.
Yeah. Well, that's what I was gonna say. Oh, I thought it was giving me a. I was just looking at it. Was it on the 15? Oh no, it was just a squeeze, but it hadn't gone gray yet. Okay, so this squeeze is not gray.
I'll throw on Haikanashi.
So we're still watching.
Oh, it is. Never mind.
Yeah, it's
I'm
on
sorry.
Haikanashi already. Yeah, that's I got a good squeeze. Price action's dead, but it's the weekend, so part of the reason why price action is dead is just it's the weekend, and the big investors that are trading ETF BTC, they're having their weekend right now.
Yeah, Pivot's extreme.
Friday
This
night.
shows chop, but in the bearish direction. Right now, we're hitting the bottom of the CPR. I expect another rejection from there, and more bearish, in my opinion.
Yeah.
But this could be a trigger wave.
Yeah. And you can see that this 4-hour, if we go to the actual 4-hour, this is ripe for this low right here. I'm going to scoot this over so that you know that this bull div is done. And then I'm going to draw this line. Here's what I like to do when I'm hunting for divergences. I maximize the chart, and then I put the div horizontal, holding the shift line, and I line it up right with that tip.
Yeah.
And then I just slide this out horizontally, and I say, okay, if this oscillator crosses below, if this oscillator goes like this, what do I want to see on price for it to be a good long? Lower low on the oscillator, but a higher low on price. So if this is the low on price, but the low on price is higher here, that's my signal to do a long. Okay. Alternatively, if it gets up here and it does not make a lower low, this is the real divergence. So that was a hidden divergence. Kermit doesn't like these, but I actually like them, the continuation divergence, because the oscillator's getting even more maxed out. Like if it goes down here, it ain't got much further to go down. If price is higher, but this low is lower, what that means is price is climbing, and yet people are still gobbling it up. That's why I like this type of divergence. Price is climbing higher than this low, but the strength of people gobbling it up is even better. So somebody with lots of money knows that this is going to the moon, and they're just going nuts on buying right there.
That point right there is something I mentioned in the Discord. I was like, who the hell is buying Bitcoin at this price? Like somebody's.
Yeah. Well, at this price up here, yeah.
Somebody's.
You ain't buying this.
They were. People were. Look at volume.
Retail idiots are. Oh yeah, let's see. Volume is just, oh my gosh. Yeah. So, well, this is a Toji, so that I guarantee you this candle, it looks green, but that is the hedge funds disguising a lot of selling with getting eaten by retail.
Yeah.
So, yeah. But so that's what I was going to say was if the oscillator does this, but the price is higher than this low, it's game on. However, if it gets up here and it makes a higher low, what do you want to see on price? You want to see price make a lower low. So that way, you draw this line here from this wick. Well, technically it's from this close. So you draw that close right there. But I like to draw it from the wicks just to know what level is, because that's market structure and that's important. But if price gets below this low and has a close between, even if it closes in between here, it might wick way down. That's probably what you're going to get is a big ol', you're going to get a big ol', let's draw rectangles here. I don't usually draw candles, but see, it gets back up, drops down a little bit, and then you get a candle that looks like this. There's the body of the candle. And then you get your wick. Oh, can't do that. You get a wick that drops down below. I'm just gonna make that wick a
What the heck was
so you
that
get a
noise?
wick down below that. It's not letting me draw a candle that wide. If you get that, and this oscillator gives you a higher high, a higher low, then it's game on either way. So those are both cases of divergences, and those are the levels we're going to be watching. Is this 68750 is the low, although it kind of SFP'd it down here like this, so you could also watch, let's see, 68720. Yeah, when you get those perfectly round numbers, you know that an institution, here's my theory about this, because it happens at the top, and I'm watching the Coinbase spot chart for this reason. When you get price tapping an exact price, and then it just shoots back, that means that somebody with literally millions of dollars had a trigger set to that exact price, and it was a fill the whole order at market price type of order, meaning they're not saying I will only pay 720 or less. They're saying when price gets to this price, just go buy the whole thing. I want $10 million worth of this coin or whatever. And that's how you get price just kissing that perfect level and then zapping back in the other direction. And it did it recently when it got to 70K or 72K. Where was it? Was it 72?
I want to make a point in a minute, and then we got like maybe 10 minutes. Is that, if that's okay with you?
Yeah, it was on the way to 70K, and price just kissed it exactly, either 70 or 72. It kissed it on the dot, 72,000, and then it flew back down. And that's your telltale sign that some big player with, $10 million or $100 million, he's on the game board right now.
Yeah. Let me just I was thinking about this, and I think this is going to be what's going to happen. And don't quote me on it. It's not a prophecy or anything that's technical analysis, but I have a hunch. Here's what's going to happen. They're going to induce longs and then take all-time high, and the institutional powers are going to sell all of it, which is going to fucking sink the price of Bitcoin. I see 47K minimum in the near future. And so they're going to sell at the high, sink the price because of these massive sell cascades. And then once it gets to 46, they're gonna buy again. So they're essentially just selling at the high and then buying more Bitcoin at a discounted price and repositioning, and it's gonna bounce back up, and then that's when I think you're gonna really start seeing a moon. Um,
Yeah.
because we had a similar thing that
Well,
happened in the last bull run where it got up high and then it like crashed in a matter of like 3 weeks. It just fucking dumped.
yeah.
Let me see if I could do a little measurement tool here. And in a matter of 2 weeks, it went down 50%. And then completely recovered, made new all-time high.
Oh,
Um,
yeah. You're talking about this one over here.
yeah,
Yeah.
yeah. So that
It
dropped
just bam.
in 2 weeks. Just dump, 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 dump. Once the institutional
Yeah.
powers get that price, they'll just sell it at a premium. And then, with the money they made from that, get back positioned into Bitcoin at a discount. They essentially double or triple their money, or at least their position inside of the asset that's going to go to the moon.
Yeah.
Why wouldn't
Well,
you do
as a
that?
counter,
Why wouldn't?
as a count,
Go ahead. I'm sorry.
yeah, that if you can do that, that's what you do. And that's what from a psychological standpoint, that's what I always have to remind myself is assume that, because you're assuming correctly, that nobody cares about you. And it's like, oh, you got in at a good price or whatever. The market doesn't care. Whichever players have the most money are going to make the most money. And if they have longs from down here, then they're going to take profits. If they have substantial profits to be made and they effectively control the market, they're not just going to sell, they're going to open shorts. So that doubles the effect of, they know they're going to sell and smash price. Yeah. They're selling on spot, okay? They're selling actual Bitcoins on spot. If they know that they have enough to sell to just crash price, why not make money in both directions? So they're opening shorts along these highs, and then when they dump their spot, they make money from their shorts on perpetual futures, and they make money in both directions. And that's why we like to trade in both directions.
Exactly. But here's my logic at the end of the day of it. They know that Bitcoin is an asset that's not going anywhere, and so they need to get a bigger market share of that to control it. So it is in their best interests to do this a couple times, because you only need to do it 3 or 4 times before your market share is so substantial that you are the owner of Bitcoin. Like, Bitcoin is you. Yeah. That is your brand. You now control it. And these powers are going to vie for that mantle. Right now, I don't think there's MicroStrategy, and it seems like BlackRock is wanting to get into it. Was it BlackRock? I forget what the article said. But you're going to see these major institutional powers position themselves in Bitcoin and setting up these pump and dumps in which they can get the most optimal discounted price.
Well, I do want to point out, as a counter art,
they're late to the party, so they're gonna the moves are gonna be a lot more substantial.
Here's my counter argument to what you said.
Sure. I like this.
We've got a range. Oh yeah, that's what we're all about. Is you have to ask yourself both, like, what do I do if the opposite happens? You know, that's how you make money. Is you always say, hey, I think this is going to happen. Let me listen to somebody who thinks or can hypothesize what if the opposite happens.
Yes.
So here's the bullish case. On the monthly chart, we've got a pullback here, and then this high here, and then nothing but chop. So this is the monthly range. Right there, it tapped. Do I have my oh, I don't have my labels put on. Text. Oh man. It tapped the 0.5. It just barely, look at that.
Yep.
It just barely kissed it.
And
So technically, we got to equilibrium on the monthly scale. And the monthly market structure can play for a year or more at a time between ranges and whatnot. So, you know, from this low to this all-time high, that is 600 days.
I think you're.
So we could go more than a year.
I think your Wi-Fi is giving me some issues.
Oh yeah.
Yeah. Let's give it a moment to kind of load up. I pulled my fib just to let you know. I pulled my fib from that all-time bottom of 16, 17.
Yeah.
That's where I
So
pulled.
this is one.
Go ahead.
Yeah. This is where you would pull a range for the entire move up. It's equal because it lines up with this level right here very nicely, equilibrium. So you see that?
Yeah.
You got some confluence there. But what I've noticed for ICT style trading is so many times the train leaves the station without you, and then you look back and you're like, oh, if I had drawn my range from this little pullback here, I would have seen that it got into just barely into discount for a moment, and then it shot back up.
Mm-hmm.
And so that's what I've seen on so many different charts, on the NASDAQ, on Bitcoin, on the daily chart, the 4-hour, 1 hour, 15-minute. So often I see that where you have to draw your ranges from where the most recent leg is. And so imagine that actually it doesn't look like institutions loaded up at this level at all. There's just dead price action right there.
Pop up volume real quick. Oh, yeah, I already have it up.
Yeah.
So here's one thing.
Volume was big at that level.
Here's one thing that I want to point out as far as my confluence and what made me come to the assessment of pulling the fib from the all-time low. Do a fixed range volume profile from the beginning of history until now. And my chart's on Binance. I noticed you're on Coinbase there.
Yeah, I'll pull it for Coinbase. It'll probably be pretty similar.
And then you have the delta on, but it shouldn't really matter.
The point of control is at the bottom. That doesn't make sense.
Yeah, I don't know if that's I think it might be exchange data.
Let's see. Let's pull it from here. It's getting up there. I'm gonna pull it from this low.
The date that I pulled it from would be Monday, August 14th of 2017.
Okay, 2017. Yeah, what I would want to know is when did institutions really start getting in? That would be what I wanted to know.
So I just pretty much did the whole life of Bitcoin.
Yeah.
And then look at 786 right there with that confluence. But if you pull your fib down to the all-time low of that 17, you'll see the confluence of
Giving me the golden pocket a little bit.
yeah, it's giving me a different fixed range volume profile.
Binance is are you looking at perpetual futures on Binance? Or spot?
I think it's spot.
Yeah.
Anyways, my fixed
I
range
think the problem with Binance is that their data has had some criminal money laundering in their data. So what I think they had a lot of was, back in the day, people were just, because they had like zero fee Bitcoin trading,
Yeah.
large sums of money were just buying and selling at the exact same instant. And allegedly, that was how like cartels or some criminal giant or government entity was transferring money was just being like, all right, put your $10 million on Binance and we will buy and sell at the exact same time because it's zero fees. And so there was some sort of money laundering going on, and
Yeah.
that might have messed with the data for
Um,
volume on Binance.
I mean, your data doesn't make sense. The fact that the point of control is at 2,900, that doesn't seem right.
Yeah, that's weird. I'm not sure why that is, because it's I don't know.
And that's an issue we're gonna have with exchanges, going on exchange. There is no like
Yeah,
um aggregate, and even if we do have an aggregate, they're not gonna give you the data in which gives you the fixed range
Yeah.
volume profile.
yeah. Let's look at perpetual futures.
Let's call it here in a moment, but just my thesis.
Yeah.
All right.
So well, the last thing I wanted to say was, looking at the chart, what we don't have back here when price crashed was we did not have the support of a half squeeze. And that's what we did get here underneath this low and here at this low, is we had a half of a squeeze, which means there is at least some significant amount of buying going on at this low, and it has dragged on long enough that somebody is loading up at this level. And down here you can see not much. And this is, remember, we've been talking about this in the Discord for a while, is look at the volume candles. Somebody really loaded their bags. How many Bitcoin is that? 8.3 million Bitcoin. So multiply 8.3 million by $20-ish thousand, and that's how much somebody's packing their bags, and everybody else is getting wrecked. And then you got another one here, and then you got another one here. So I'm going to draw this now. We may not see this line touched for a year or 6 months or whatever, but I'm going to draw this line now. Let's pull it in and make it exact. This is the highest volume on oh no, I want to go back to Coinbase. This is where you're going to get it's similar. This is where you're going to get institutions having taken significant profits. And I'm going to make it red. So if you see a weekly volume candle get all the way up here, good Lord, you better be opening the biggest short of your life. Because look at that. That's the volume spike right there. See that one? That's the low, all-time low. And then people were packing their bags here and here on these lows. So we may, or we may, pull a Japanese stock exchange and we may never see this again, but I doubt that.
One thing I want to point out, we should call it here now, but one thing I want to point out too is there was clearly a lot of buy orders when it got to the 0.5 of your fib pool, that to the point where it just immediately gobbled that all those cells.
Oh yeah, that's it. It
if I remember correctly, that candle happened
big
in
old
like
doji
in like a few hours. It was like oh.
You mean the price action of this candle was just a few hours down to that low and then back up?
I think so, yeah.
Yeah, well, that's part of my theory, and let's pull this out. I'm gonna, where's my price
that can
note?
be explained with like automation. So somebody had a bunch of fucking limit orders.
Yeah, so what we had here was $4,950. Give it a penny, but still, somebody had some pretty massive orders. And when I say somebody, I'm not talking about some, interbank algorithm, one algorithm. I'm saying a lot of somebodies with a lot of millions of dollars. I don't believe in the conspiracy.
Yeah.
But there's people there waiting at this level. And when they buy, They are not buying, saying, oh, I will only pay this much or less. You know, I want to get a good deal, because they won't get as much as filled as they want. They know that this is an amazing price. So when price hits that level, they're smashing the market buy order button, and they're throwing, you know, $1 million, $10 million at any price. And that's how you get those insane drops down. And then it just shoots right back up.
Yep.
A fast move is a false move. And if you see it just nose diving, bombing straight down and coming right back up, that is your indication that somebody is loading their bags.
Yeah.
So
All right.
anyways,
Yeah, let's call it here.
we're going to be posting more of these setups in the Discord, in the private Discord. When I see these, see how rare this is? This little gray. When I see these setups, I will be posting them, and they are very, very high quality, high probability setups. This is called this high right here. That was an amazing move. So yeah, hit us up in the private Discord.
Absolutely. Yeah, www.cartoonmoneyprinters.com. Yeah, thank you everybody.